I hope everyone's doing well. Welcome back to another video. So today's video is going to be, well, as the title says, a simple Forex intraday trading model. So the thing with teaching models, right? Models have lots of moving parts. I feel like they're not taught correctly, so to say. And what I'm going to teach you guys is more so a list, you could say a checklist of things that I look for on a day-to-day basis. And the model that I'm teaching, I'm not teaching this for the sake of it. This is genuinely stuff that I use every single day and look for every single day. The only thing that I ask is that you guys please work through the other videos in the SMC series. This video, of course, should still make sense even if you haven't watched them, but the depth and the understanding provided for each concept in the other videos, you need to get that first, then come here, and this video is going to be about bringing it all together on an intraday level. So yeah, let's get into it. Now, the first thing is, right, we're trading intraday. So when are we trading, right? Trading during the day, of course. During the day means what? Trading during this daily candle, right? This is what your typical day can look like in Forex. Midnight price, of course, where the candle starts. We have an Asia range. We have something called a Judah swing for London. And then New York provides continuation. The three main parts that I look for on a day-to-day basis. Now, what's really important here, right? This model that I'm going to teach you guys, we need Asia to be a range, right? If Asia is not a range, then already I'm a bit, do I really want to trade today? Because I don't trade every day, right? There's certain criteria I have to tick off before I decide whether today is a trading day or not. On top of that, right, my Asia range is the same as ICT's Asia range, which is 8 to 12. So 8 p.m. to 12 a.m. New York time, right? So please bear that in mind, because it's not the Asia range that I see a lot of people have on the indicators. So here's a simple rundown of the plan before we jump on the charts and we can visualize it. As I just mentioned, I want to see Asia range, right? Then I want to see a run on the Asia range liquidity via Judah swing. We anticipate a market structure shift. There's a lesson on this again during the London kill zone. And then we can get an OTE entry. Again, there's a lesson on OTE. Then we just trade towards our target. If we miss that, it's not the end of the world. There will be re-entries offered, usually during New York kill zone or even later during London, right? Now, one thing before we jump on charts, right? I mentioned Judah swing. This is very important. Why is this called a Judah swing, right? Let's think about it for a second. Price opened over here, right? This line here on the candle. First we moved down and then we moved up, right? London was the move down first and then the move up, right? What does that mean? Judas is essentially, let's say, in simple terms, a fake move. A move against the bias of the day. It was a bullish day, but the London Judas was bearish, right? But we want to see something like this. A clear move like this during London before we take a trade in the opposite direction. And how do we take a trade? We wait for confirmation, right? And what's our confirmation? Market structure shift. So if you haven't watched that lesson, make sure you watch it. Let's jump on the charts. Now, this day is quite an ideal example, right? As you can see, we have, our Asia range here. Not any massive movements, of course. And I know we could argue that this is trending, but I will take it as a range because, the total movement from there to there is just about 30 pips. That's what we like to see for Asia. So you guys see I've marked out two things, right? Sell side liquidity, buy side liquidity. Now, what was one of the first steps in our plan, right? Asia ranges, and then we expect a run on Asia liquidity. So now, this is the disclaimer, right? We will see a run on Asia liquidity most days, in one direction at least, But price will not always, take one side then take the other. Don't automatically have that assumption. Now, how do you know if it will, right? The answer to this is bias. You need to know whether this is a bullish or a bearish day. Now, unfortunately, that's not something I've covered in my lesson so far. I'm not sure if I will do it in my free lessons at the moment, but I have given that last lesson on contraction and expansion and the MSS, and I think it's very fair that if you watch that, you can start building ideas for bias and understanding where the next daily candle might go. It was a bit of a longer video, so I don't know if most people will watch it, but trust me, there's a lot of knowledge in that video. It's one of the most detailed ones I've dropped for my own premium. But cool, back to the model, right? So, assuming that we know this is a bearish day, which it was, right? This day, this is from, literally, I believe last week. And I knew this day was bearish. Oh, well, I went into this day expecting bearish price action. So when I see this run above, right, it piques my interest. So let's look at what happened, right? London opens and we have this run above Asia buy side liquidity. And then we have this strong move down to cause a market structure shift. Now, where did the market structure shift happen? When we took this low, right? You can see, very strong move. And now, when we have a market structure shift, what we like to do, right, is draw an OTE. Let's say we drew it at this low and we expect a retracement. Now, ideally, I want a retracement up here, right? There's an imbalance here, for example, this order block, whatever. I would have liked to enter a trade in the premium of the OT. However, that didn't come. So, price carried on. Now, where's the next range? Price creates another range from here to, down here. Again, I would have expected a retracement higher, but it doesn't come. Fair enough, cool. By then, London's ended. I'm not really interested in trading. Most days, what will happen is something like this. I'm placing the fib at this low. And what I want from price would have been for price to, create this market structure shift at the top of London, creating the high of the day, and then for it to come up into this imbalance. You see the imbalance in this candle, for example, or potentially up to this order block. Any of the premium arrays, if we're shorting, discount arrays, if we're buying, right? But of course, in this instance, we didn't get that move. So now, I haven't seen a trade worth taking during London. So now we're going to New York, right? And when we go into New York, what do we expect? Now, again, I explained I had my bias for this day. I was bearish, so, it's quite nice. As we come down into New York, one thing I'd like to mention, right? These boxes I've drawn, these aren't actually just a session. So this is ICT's Asia range. This is London kill zone, 7 to 10. And this is New York kill zone, 12 to 3. This is UK time. But as New York kill zone opens, what do we get? Right, we have this high and we have this low. So what can we do from this high to this low? We can OTE it, right? So now what happens? Get a nice move to the premium. So if we're taking this trade, where can we place our entry? We have an imbalance here, we have an order block here. Let's say we place it here, this order block, all right? And our stop loss always goes above the one. And we can set a take profit, here. Potentially, there might be a liquidity pool over here that we want to target. For example, this low. You could set your take profit to this low. Now that's 5R, right? But let's be conservative. Let's just try and get what we can. So let's stick to 2.5R. All right? So cool. 2.5R goes to our take profit. Quite nice and easy. Simple trade. But we're not done yet. That's one trade. Price moves off. Now, what do we have here? We have price, this swing, and then this low, right? What does price do again? come to the premium. And when is this happening? During the kill zone. So what can we do? Use this order block, right? To start off the body, set a trade, stop loss above the one, and we can be conservative, nice 1.6R, or again, we can target that sell side liquidity pool, which was somewhere around here, and it's almost 3R, let me just line it up. Yeah, around there, so almost 3R. Now, assuming you caught both of those trades and you risk 1% per trade, you could have made anywhere from around, give or take 4% to about 8%, and that's quite simple. I feel like the problem with most people is they'll try and trade every session. They'll try and trade both London and New York. You don't need to. Sometimes it's better to just sit on your hands and watch, and that's what I did on this particular day. When we have these runs on Asia, right, we run one side, we can typically expect to target the other side during the day. For example, if we drew this below, I would expect it to target the buy side, right? Let's try and find another example now. Okay, so here's another good example, right? Even though this was a bearish day, as you guys can see, we have this move down, and then we end up heading towards Asia buy side liquidity. Right, we have this strong move up. And I'm on the 5-minute time frame. It is possible you can catch a move on the lower time frames, but this will not always, happen. And again, it's better to sit on your hands if PA is unclear. If the price action is not clear to you, just avoid trading. I'm trying to look for a more recent example that I traded the other day. Okay, cool. So let's take this day, for instance, right? Now, of course, we have Asia. Asia wasn't exactly a range. But we come down here, and then we start to have this move up, right? And at this point, if I turn my indicator off, you guys see this high, took out a previous high. So now we've had a market structure shift, okay, on the 5-minute, going into London, right? It's not all about just saying, oh, London kill zone, blah, blah. You need to understand what price is doing around you, right? So cool. What do we have here? So I know one of my students actually caught this exact trade, right? And the way he took this, he took a long position, and there was a lower time frame imbalance somewhere around here, right? And again, stop loss at the 1, and he set a long and he targeted the other side of Asia, right? I'm pretty sure he partialed around halfway, but that's not the point. He got in the move quite nice. Cool. Now, that was the first clear trade given that day, in my opinion. This retracement during London kill zone. If you missed it, is it the end of the world? No, because look what happens right after. This is why you have to be hands-on during the kill zones. Now, look at this. From this low to this high. What is this candle? This is an imbalance, right? So in the discount, you had a nice target. So let's say the open of this. You can place your stop loss here. And again, you can potentially long to the top of Asia. Even there, that's 3R. Assuming you caught both of them, that's some nice percentage you can run up. Now, after that, you can then draw another swing, but of course this swing didn't come to the OTE. Have another run up, then we start getting the move down. Now, for the remainder of the day, right, at that point, once Asia buy side has been taken, we expect a market structure shift, right, in this instance. But we get this mini consolidation, unclear price action, right? So what do? We just don't trade. No, we don't have to trade. There's no one forcing you to trade. Then we just wait for New York kill zone if it offers anything clear. And in New York kill zone, again, to me personally, there wasn't much offered. There was one trading opportunity here. I didn't take this. I took the buys in London early that day. But, we have this offered. And price runs down. So, for example, we shorted off this order block. It was a bit clearer on a lower time frame. And you know, price is in a downtrend, right? So what could we have done? You could either just stay here, that's 2%, or we can target this low over here, which of course got run. That's about 4.5%. So I hope, you know, this video, I know it's hindsight, but of course I'm trying to show you guys live examples from different scenarios and different days, show you how this plan works. So just to go through it one time, you guys see everything is done in chronological order. We anticipate an Asia range. We anticipate the run on one side. Then we wait for a market structure shift. When the market structure shifts, we draw on our fib, and then we wait for it to come to the OTE. We let it trade in the direction of the other side of the Asia range, or, you know, any other potential drawn liquidity. Drawn liquidity is what price is currently attracted to, or where it's headed towards. And then sometimes during New York, we get continuation. We get opportunities to re-enter trades. Now, this is very, very oversimplified. So please, it's not the holy grail of, you know, all of my trading. There's a lot of other moving parts, concepts that I'm not teaching on my YouTube that do play a role. And I think this, what I have given today, is still good enough to take away and build a model. And when you see this happen on certain days, you'll be able to see nice, clear trade entries. Because this happens day in, day out. I watch it happen day in, day out. So I hope that's been helpful for all of you. Here's all my socials. You guys can hit me up, any help, you know, just drop me a message on anything. I'll be happy to help.